I always say to people that realistically, if you can get borrowing from your bank, that will be your cheapest option. The business plan, the financial model, is the bit that really swings it for a lender, because they're financial institutions. They understand a financial document. The people that sit in these offices and decide whether they're going to lend or not lend, they're risk managers. The more comfy and cozy we can make them feel about lending to the client, the better rate that client is going to get. And it's all about, with a lot of glamping, it's more, a lot of it is about the feel as much as it is about the financial information.
Hello and welcome to the Glampy Tech podcast. Today I'm joined by Ken Riley of GTF Event Equipment Finance. GTF are specialists in providing financing solutions to the glamping industry, allowing prospective site owners the extra help they need to get their glamping dream off the ground. Financing is something Glampy Tech are placing more of a focus on of late, as it can be a major stumbling block to a lot of people. That's why we're recording a podcast with Ken, as well as running financing webinars and sessions on the Glampy Tech Academy to help people learn more about this area. We've also got a blog series planned on the topic, so keep an eye out on that. This episode is aimed at providing an introduction into what the financing options are for prospective site owners, as well as considerations they need to bear in mind when applying for financing. As ever, I hope you enjoy and find value in today's episode. Hi Ken, how are you doing?
Well, thank you.
Thank you for coming on. So you're a partner at GTF Event Equipment Finance. You arrange financing for people in the leisure industry and the glamping industry specifically. Just before we get into the types of financing that are available for prospective glamping site owners, could you just give us a run through of you and your background and how you came to be at GTF?
Well, we've been, there's myself and my business partner Neil, we specialise in providing finance for the glamping industry. In reality, we've been providing it before it was even called glamping. Our initial speciality was providing finance for the marquee hirers. The marquee manufacturers then became manufacturers of safari tents. And so then we started financing safari tents for farmers in fields, etc., 20 years ago, before the term glamping was even invented. Obviously, that marketplace has expanded dramatically. We've financed, we were in the early days financing purely safari tents. Latterly, we hardly supply any finance for tented structures anymore. They've all moved over to being wooden structures because of the advantages of being able to rent them for 365 days a year. And that's where the edges begin to blur a little bit, in that we do glamping equipment for anything from about £10,000 right up to a couple of £100,000 for things like a couple of £100,000 for a tree house, for example. And that's, again, glamping has the whole marketplace has changed dramatically over the last 5 years, in that it used to be quite small sites, 6, 12 glamping units, slightly unique, out in the wilds, tend to be lifestyle businesses. But the whole glamping industry has started to blur a little bit into the general leisure industry. So we now find that we're actually being asked to finance things that might be on what we would have traditionally called a leisure park site. And so that's why our range has gone now from being £10,000 up to being in excess of 200, and then multiples thereof. So for that, we have alliances with 7 different lenders and a few ancillary ones around the edges. And it enables us to match the individual requirements of a particular client, whether it be somebody wanting to start a new start business, wanting a couple of pods, right the way up to a leisure park who are financing a number of units, 30 units. We're just doing one at the moment for 30 units, and anywhere in between. So we've got that whole range covered.
Okay, and obviously it does sound like there is a big range there. let's say someone approaches you, I'd say, a fairly typical client of ours may come to us and say they want to just set up a standard 6-pod glamping site. Your typical client, are they generally, do they generally want the majority of their project finance, or is it a case of just a little bit of help to tip them over?
It's horses for courses, really. We get everything from sort of a new start business, never been involved in the glamping industry, recently purchased some land, getting up to the planning permission stage, wanting to put a couple of pods on the land just as a sort of an experiment to see if it's a viable proposition for them, their area, etc. Right the way up to sort of existing glamping sites, adding, they've already got 6, they want to add another 3 or 4 to their glamping site, particularly, 21, 22 is going to be a very, very buoyant year with everybody not being able to go abroad. So recently we've had a lot of sites coming along that are expanding their offer because they know that the market is going to be there. So the typical site, new start, is probably 4 to 6 units people tend to be going for. But some new start sites go straight in with 12.
Yeah, and let's get into the meat of it then, I suppose. What are the main sources of financing that are available for someone who comes along and wants help with their glamping site in terms of financing?
Well, I always say to people that realistically, if you can get borrowing from your bank, that will be your cheapest option. And let me just explain that. I mean, we do asset finance. Predominantly, we do hire purchase and finance lease. But let me just sort of go through the bank bit of it first. The bank will be able to offer you probably the lowest interest rate because they will take a charge over your land, etc. So they've got plenty of security. They don't particularly get glamping as a general rule. And banks are really quite good for the working capital element of starting a new site, things like groundworks and just general working capital. Where we come in, we tend to do predominantly hire purchase and finance lease and a little bit of commercial loan. And in those instances, let's just take finance lease for an example. That a lender would lend on the actual structures. So they are not taking any charges over land or any kind of property. Their primary security is the actual asset. Obviously, that will then be backed up with a director's guarantee or a personal guarantee because obviously they want a fallback default position. And that's the same realistically, whether it's hire purchase, finance lease, or a loan. So it's a lot less. They have a lot less security than the bank because they aren't taking a charge, which is why I always say go to your bank first. Make sure if you can't get it from them because they don't understand, then hire purchase or finance lease is your way forward. Now, if we just talk about the differentials between, people sometimes get a little bit confused of what's the difference between hire purchase and finance lease. It's effectively the way in which the taxation works on them. A finance lease is effectively a hire agreement as far as HMRC are concerned. So you can fully expense any payments you make to the finance company because it's technically a hire. Within a hire purchase agreement, basically that asset goes on your own balance sheet, and then the payments you make to the finance company, part of it is made up with the loan repayment and part of it is the interest. Now you can expense the interest, but you can't expense the repayment of the loan. What you do there is you then claim depreciation or capital allowances against that. But that generally means that it takes quite a long time to depreciate your asset, whereas with finance lease, if you take it over 5 years, effectively it's depreciated over 5 years. Now, different people will have a different reason for going hire purchase or lease. Limited companies, VAT limited companies tend to go down the lease route. Individuals who are not VAT registered very often go down the purchase route, because with hire purchase you're paying all of the VAT up front. Now with a lot of these structures they qualify for 5% VAT, so why would you start, if you're not VAT registered, you can't claim it back, you wouldn't go for a lease. And we try to advise our clients as they go through that, just by asking the simple questions: what sort of business are you going to be? That then tells us what sort of finance would best suit them.
So it sounds like it's important to speak to an expert before jumping straight into a lease or a hire purchase. Make sure you speak to an expert so they can tailor it to you.
Yeah, we would give them general advice. Obviously, we can't give them specific advice about their situation, because, and we always recommend they talk to an accountant at that point in time, because we don't know their other part of their financial situation. We know what wouldn't necessarily be the best solution, but we don't know what else is within the background.
Okay, so there isn't. It doesn't sound like there's a one size fits all approach, really. Because I was going to ask you, what would you say is generally the sort of cheapest / best option for a prospective site owner? But really, it completely depends on your personal situation.
Yeah, right. Okay, what's the cheapest, best way of doing it? If you get it from the bank, that would be the cheapest.
Yeah, of course. Yeah.
Most can't, and then that's why you come to a specialist like us. It's about, I say we have 7 different lenders, but these lenders have preferences for particular types of business. And it's our responsibility to match up the client's requirements with the best lender, the one that's going to give them the best rate. And let's just sort of cut to that. Is how do you get the best rate from a lender? Now, it's fairly simplistic. If you think about it, these people are risk managers. They take a proposal from us for the client, and what they do is they assess how likely the business is going to be, how confident they feel that their proposal, that business is going to be successful. If they're a little bit nervous about it, well, they'll increase the interest rate. So the best way to get a good rate from a lender is to have a proposal that's presented that presents them in the best light. And without blowing our own trumpet, that's our job. We're very good at that. We take a proposal from a client, and we help them build that into what we know that particular lender is going to be looking for. And it's all about, the major things. If you want to have a successful proposal, there are a number of things you're going to want. Obviously, number one is going to be the person. They will be credit checked. They have to be, for money laundering purposes, they have to be proved that they are who they say they are. That's an obvious first one. So the first bit through a successful lend is the individual. Are they a lendable individual? The second one is the type of equipment. Now, there are lots and lots of different glamping manufacturers, but if you think about it, the lender is lending against that specific type of equipment. And so that's their major form of security. So they like equipment that comes from reputable manufacturers, because they know that it's good quality equipment. If they did have to come to sell it, they've got a good residual value. They're less likely to give you a good rate if you're getting your glamping unit from somebody who's never made one before, for instance. That they would see as a risk, which would put the rate up. Wouldn't mean that they wouldn't finance it, but they might increase the rate. And then the third thing is, realistically, the plan. Everybody who presents to a lender has to have a plan. Now, when I say business plan to people get a bit edgy about this. They start thinking of 50, 60 pages, War and Peace. That's not what it's about. It's really quite a simplistic document. It might only be 8 or 10 pages long, but it basically, in that document, you're communicating to the lender that you've thought about your site. You know the type of people that are coming. you've done some rudimentary research around your area to know that the rates you're going to be charging are realistic, that you haven't got too much competition in the area, all those sorts of, that people actually want to visit the area where you're starting your glamping site. Again, that's pretty rudimentary. It's only a couple of pages of text. And then they will want to see a financial projection. Now, for new starts, that's obviously quite a difficult thing for them to do, but it breaks down quite nicely. If the one that people fall down on most is justifying their sales, because everybody can know, well, this is what the finance costs, this is what we think it's £25 a night to clean them. Yeah, it's very easy to calculate those figures. The one that people sometimes fall down on, most commonly fall down on, is proving what their occupancy rates are going to be and picking a realistic occupancy rate. Lenders are used to seeing these plans, and they're used to seeing sort of occupancy rates proposed in the very late 40s to the sort of mid to late 50s. If you start putting in a proposal that says you're going to have 80% occupancy throughout the year, a lender's they're not going to discount that plan, but they'll automatically discount back the occupancy rate to what they believe is a reasonable level. Now, we all know that in actual fact at the moment, occupancy rates are far higher than the 50s. But we're talking about lenders; they are cautious people, so they will always discount that back. So we always advise, yes, you might be able to do 60, 70% occupancy, but tell the lender that you're going to do 55. He'll be happy with that. If it proves affordability, which is it's all it's trying to prove, is that a lender wants to see a plan where you're making lots of money. Because if you're making lots of money, then you can afford to pay the finance. And it is realistically as simplistic as that.
Well, one thing that we do in our feasibility studies is we do like a conservative, a standard, and a optimistic estimate for our occupancy rates, and then you can track the ROI based on those. So I think maybe that's a good idea to just maybe do a few different projections to see how things could pan out.
Can I pick you up on that?
Yeah.
You say you do the feasibility studies.
Mm-hmm.
Again, that's a very, very powerful document to a lender.
Yeah.
We've seen many of your feasibility studies, obviously, but that is quite a powerful document, because that says that's an independent person saying what they believe the occupancy will or should or could be. Whereas if you're inventing your own figures, that has less credibility.
Yeah.
So that's quite a powerful document.
Yeah, and out of interest, just going back a little bit, you said that banks don't tend to get glamping. They don't tend to, back prospective site owners. Why do you think banks don't understand it and don't really get involved, whereas the lenders that you're working with do?
Well, simply that. We have specialist lenders who know and like to lend into the glamping market space. They understand that market space.
Yeah.
In fact, one of our lenders even has a specialist underwriter for the glamping market. Whereas when you think about a bank, you're approaching a bank or a bank manager who's lending on all sorts of projects. They don't necessarily understand glamping, and they then get a bit nervous about it. And so if it's something lending outside of their normal remit, they tend to err on the side of no rather than the side of yes. Some, you'll come across some bank managers who've been on a glamping site. They've read in the newspaper that glamping's been very successful. You're likely to be able to get a bank loan from that particular bank. Also, not to put too fine a point on it, most entrants into the glamping space are by their very nature new projects or sort of fairly new projects, because the whole glamping industry is relatively new, and banks tend to not particularly. They like a business that's been around for a number of years, has got a good track record, before they'll lend. The old adage of the bank will only lend you an umbrella if it's not raining.
So on the subject of the actual application, you ran through what's actually required. What would you say is the actual most important part of the application, and what do people need to focus on in particular?
The focus is really on the business plan. That's what really, if you think about it, that's proving who you are, getting a reputable equipment. The business plan, the financial model, is the bit that really swings it for a lender, because they're financial institutions. They understand a financial document, and it's all about affordability. If you've got a plan that doesn't create enough money to really service it, and you have a profit out of it as well, no matter how much security you can offer to the bank, you might have £1 million of the security. There would be no point in doing it, because the plan says that the debt can't be serviced very easily. So it's all about having that good financial model.
Well, I'm glad you said that, because we've literally just started offering business plans. So if anyone's listening and they need one doing, just give us a call.
We very often go back to our clients and help them refine their financial model, because we've got a lot of it. It's the first one they've done. We see hundreds a year, and we see the ones that get accepted by the banks and the lenders, the ones that don't. So it's worth running it. Put it this way, it's worth running it past us, because we can very quickly help you refine what needs to change.
Yeah. Okay. And the last question, just going into it, is if you could give one tip to a prospective glamping site owner who's looking at getting financing for their business, what would that be?
Well, that's a very good question. And it's not particularly about finance. The tip I would give is that people really need to think about what they're offering for their glamping site, because there's no two ways about it. There are more and more entrants into the glamping market. At some point in time, there will become saturation. And if you think about your own glamping site, you're then going to have to compete against other glamping sites. And so it's what's unique about your site and why people will come to your site in the future. I think that's more important as a tip to somebody coming into the glamping market. And if you've got that right, then getting finance for that business will be much easier, because you've actually got something unique. You can demonstrate that to the lender. When we come back and the lender says, well, why are you going to have occupancy of 58%? They've already read in the plan that actually it's in an area of outstanding natural beauty. You're catering for this particular client base. They can understand that. So it's all about having a thought out process, I think.
Yeah, we absolutely. We always go on about the importance of a unique selling point, or at least one unique selling point. You can have multiple, because as you say, there will be a point where we reach saturation, and then it'll be like any other business where you've got to stand out from the competition, or otherwise you'll die. Really, it sounds dramatic, but you will. You've got to stand out from the competition, whether that's the local competition or wider areas, and that can be done in all sorts of ways. Obviously, for a financing application, you want to be able to show it immediately. So, it might be unusual accommodation or something like that, but it can also be, once you're up and running, it can be your marketing, your branding that can be superior to your competition. But yeah, it's a common theme. You've got to be able to stand out. Otherwise you are going to struggle as the market gets saturated later down the line.
And that, when you demonstrate that to a lender, that automatically starts them off in a confident vein. And as I said before, the people that sit in these offices and decide whether they're going to lend or not lend, they're risk managers. The more comfy and cozy we can make them feel about lending to the client, the better rate that client is going to get. And it's all about, with a lot of glamping, it's more, a lot of it is about the feel as much as it is about the financial information.
Yeah, that's interesting. Actually, going into this, I didn't actually quite understand that really, because I thought it was a bit of a binary thing where you either got financing or you didn't, and there was a sort of just a line in the sand where people change their minds. But it sounds like, as you said there, the stronger the plan is, and the stronger the field the risk manager, as you put it, has for the project, then the better deal they'll get. So it's a sliding scale. It's not just yes or no.
And also it does vary by, you get to know when it goes to a particular underwriter, you get to know what their particular foible is. So you would, when you know which underwriter it's going to go in front of, you try and cater to their little individual idiosyncrasy, shall we say.
Yeah, very good. Okay, well, thank you for giving up your time, Ken. Really appreciate it. If anyone wants to get in touch with you and ask about financing and glamping, how can they do that?
Right, okay. Well, they can just basically call me on my mobile, which is probably the easiest one, which is 07792 247 248, or send me an email at ken@gtf-eef.co.uk. But I can't stress to people, pick up the phone, give me a call even before you get to the nitty gritty, because very often just a 5-minute conversation can help people be guided in the right direction before they make a mistake. They come back to me and go, "Oh, I'm thinking about doing financing it this way. Actually, can I tell you that won't work?" So they've invested a lot of time and energy into something that wouldn't work from a financial side of it.
Okay, so we'll put your contact details in the description as well, and keep an eye out for you. People need to keep an eye out for you, Ken, because I believe you're coming on our academy, aren't you, and doing a few presentations.
Well, yeah. Well, that's what they tell me. I haven't got a date yet, but I'm registered for it.
Okay, well, so yeah, if anyone's interested in joining the academy, the details are on the website, and again, we'll put a link in the description. But we'll do some sessions on finance and stuff like that, so you can hear from Ken there. But okay, yeah, well, thank you for coming on, Ken. I really appreciate it. And
thank you for inviting me.
See you soon. Thank you for listening to another episode of the Glampy Tech podcast. I hope you enjoyed and that you found value in today's episode. If you did, feel free to leave a rating and review on Apple Podcasts, as it really helps us move up the podcast rankings. Thank you.